in real time, Janine and I would complain about Jon Stewart's politics. I certainly complained even more so with his rally for nothingness or whatever it was that he was doing. But I don't know. His politics seem to have been improving a little bit.
This is great. And I mean, I understand the critique of some of his recent interviews are that it sometimes falls back into hypocrisy shaming, which has limitations in terms of the value for the progressive agenda. But in this instance, when he's sitting down with Larry Summers, I found it to be incredibly effective. And I'm just amazed that Larry Summers agreed to do it, because what we've been seeing with Stewart so far is that he'd been getting, the Arkansas Attorney General or some state lawmakers agreeing, but national guys are like, well, I don't want to go into that minefield. Larry Summers was arrogant enough to do that, and it's for all of our benefit. This is going to sustain me. I don't need to eat for a few days, because just seeing Larry Summers get humiliated is everything I need.
Okay, let's see this.
What basically happened to us as we had massive stimulus and an economy that could only produce so much. We had huge levels of demand, and those huge levels of demand kept pushing up prices and pushing up wages. But ultimately, it was you put too much water in the bathtub overflows. You put too much demand into the economy, and you get high and rising prices.
But the San Francisco Fed says that demand is maybe 30 to 35% of the inflation. Wages are really around 20% of the inflation. There's a huge corporate profit aspect to it. There's a huge supply chain aspect to it. But our method for controlling it seems really much more focused on wages and employment.
There's certain sicknesses you can have where there's a drug and it has side effects. And everybody hates the side effects, and no doctor wants their patient to suffer the side effects. But if you don't address the sickness, you're going to have a bigger problem down the road.
But the stock market assets have gone up 150%.
Just pause it for a sec, just to clarify. So what he's saying here is that the sickness is inflation. The drug that people are going to take are the rapid rate increases by the Fed meant to discipline labor. And the side effect is that people are going to get laid off, and that wages are likely going to be dampened and the increase is going to be dampened. So just to clarify, because this is sociopath speak for, we're going to put people out of work.
Now, also, let's also be clear. He's also pretending there's only one medicine that can be taken here. Right? We just heard him hear that 50% of this is, 30% is an increase in demand. 20% is a rise in wages. And let's also be clear, wages have been stagnant for so long that needed to happen. So the only medicine that he will prescribe is one that impacts essentially the 20% of people who have gotten increase in wages, or 20% of the problem. It will theoretically impact the 30% of demand. It will sort of stifle demand here. Of course, it will also stifle demand for housing and for building housing, which again will increase inflation, because much of our inflation is also coming from rent. But the other 50%, which either will fix itself in the form of logistics or won't fix itself really for a while, the price gouging from corporations, there's no medicine for that, apparently.
No.
According to Larry Summers. There's only the medicine that makes other people feel some pain.
CEO pay has gone up 1,500%. Workers' wages haven't gone up at all. I think you're misdiagnosing the sickness.
First, John, inequality is a terrible thing. The most serious problem the American economy has been the cleavages between those like you and me, who are very fortunate. That's why we need a strategy of strengthening
you and me.
Labor power. in the economy. The question, though, is...
Pause it. Can you imagine? We need a strategy to strengthen labor power, and all he's doing is advocating a strategy to weaken labor power.
He's just saying this to cover his ass. And then as he tries to say, we're the same. Like, you're a rich guy, Jon Stewart, so you're the same as me, right? You know, who's actually held power and used to be the president of Harvard and has been advocating for these wrong, criminally wrong fiscal policy prescriptions for his entire career. We're in the same boat. And he keeps up with this line throughout the interview. It's pathetic.
Issue that somebody whose control is over setting interest rates and printing money.
I'm sorry, go back. We skipped a little bit. Go back. All right, go ahead.
Like you and me, who are very fortunate. That's why we need a strategy of strengthening labor power in the economy. The question, though, is it an issue that somebody whose control is over setting interest rates and printing money can do much about? Now, you could say that they shouldn't have responded
Pause
to the
it now for 1 second. Let's also be clear here. The Fed has a dual mandate. Mm-hmm. One of them is price controls, essentially, stability in prices. The other is supposedly getting to the point of the highest level or lowest level of unemployment possible. So there's a dual mandate. So it's not like it's not outside their purview, but also he's also saying, like, you know, maybe it's like he's starting to admit that we're going to a foot doctor to fix our, you know, throat or something like that. And he's like, well, this is the only thing a foot doctor can do is put a cast on. Go back just a little bit.
Labor power in the economy. The question, though, is it an issue that somebody whose control is over setting interest rates and printing money can do much about? Now, you could say that they shouldn't have responded to the 2009 recession by cutting money, by cutting interest rates. You could say that.
Yes,
but
you could.
Do you really think, and certainly that wasn't what progressives were saying at that time.
It doesn't matter.
At that time, progressives were saying we need lower interest rates so people can borrow money to buy houses and put people to work.
But they were
lower
stimulating
interest rates
it
for car loans.
At the corporate level, where they just put the money in the hands of the bankers and say, you decide. This pandemic was the first time the government, in my opinion, did the thing that they're supposed to do in a crisis. When you look at the stimulus payments that went out, you know, 70% of it was being used for rent and food. And if you look at the recovery in the pandemic versus the recovery from 2008, when you stimulated the economy at the demand level, jobs had plunged in the pandemic, and then they shot back up. The recovery in 2009 was painstaking, but the stock market did great. So our fiscal policy and our monetary policy has always been on the side of corporate easing.
Just so we're clear, if you talk to African American voters, if you talk to Hispanic voters,
like I do,
voters who don't have college degrees, they regard the country's biggest problem as having to do with inflation. Mm-hmm. So while you may see this as having been tremendously successful, our fellow Americans who don't live as comfortably as you and I do have a lot of questions, John.
Okay, pause it. There's just so much bullshit
Larry
here.
Summers, Vox Populi. Come on!
Yeah, you know, he talks to everybody, people without college degrees, all the time as he's doing Zooms with the Bahamas in the background.
In fact, the person who brought me this pina colada has no college degree.
Like, okay, so first of all, it's a complete fiction that the stimulus payments are what drove inflation. It's just not true. It's just not true, but he's returning to that. And secondly, oh gosh, I totally had, what was my other point? Well, his perspective on inflation, he's lying there too about who's really concerned about inflation. There are people, of course, regular people who were concerned, like the price of milk is going up, the price of gas, food, etc. They were concerned about it. But a majority of the panic in the coverage and from the business community comes from the fact that creditors were freaking out with the rise of inflation because the value of the debt that they hold lessens as inflation goes up. And so that's Larry Summers' concern. That's wealthy people's concern. Because if they really cared about the regular person, they would not be in favor of increasing these rates at such a rapid rate that it's going to then discipline those same people that they say that they care about on the consumer side or on the buying side. It's so ridiculous. But
and again, we know that 30% of inflation is a function of increased demand, and frankly, I mean, if you look at the areas where the demand was, it wasn't from people necessarily who were getting increased unemployment or whatnot. I mean, if anything, you could say like maybe that enhanced wages a little bit, but that's not the
inflation that those non-college educated folks are concerned about, though.
Right.
It's basically that inflation was gas was a huge one, and rent ultimately. But we know why there was inflation with gas. Aside from what was happening in Ukraine, it was they shut down refineries. They wouldn't restart them.
Because of wokeness.
Tremendously successful. Our fellow Americans who don't live as comfortably as you and I do have a lot of questions, John, about what's happened. And it's not hard to understand why they have a lot of questions in light of what's happened to their purchasing power.
But you're suggesting their purchasing power.
We took a good idea and overdid it.
I disagree.
By providing for too much inflation.
But what you're not addressing is not all of inflation was stimulus. The tools that we have, though, are basically saying to somebody, everyone's paying more for gas and groceries, and that's really hard. So here's what we're going to do. We're going to throw 10 million of them out of work so that we all don't have to share that burden. Why aren't we attacking corporate profit in any way? Because that's been
price
estimated
control.
to be 30% of inflation, 40% of inflation.
I don't think it's a tenable view that all of a sudden corporations became greedy. Of course, there's monopolies in the economy, John, and we should be for
They've been bragging about it on
much more aggressive
calls.
than we were.
They're on their earnings calls, they're saying our profits have never been higher. We're killing it. The markups during the pandemic are sometimes they're saying 70% of what they were.
There was a huge increase in the demand for shrewd television commentary. I imagine the demand for what you do would go way up. And I imagine you'd convert that into higher wages and getting more and getting paid better.
You're saying it's the market at work.
I don't think you'd call yourself a gouger when you.
I would absolutely call myself a gouger.
When you did that.
And by the way, the effect of the talk show business is very different than the effect of ExxonMobil, right? I mean, let's be fair.
Isn't this show going to be on Apple TV?
Correct.
And I think Apple TV is worth about 5 times as much as Exxon. I think Apple's price, since the stimulus began, Apple's value has gone up by about $1.2 trillion.
Right.
That's $4,000 for every American, just in increase in the value of Apple.
You just made my point for me.
Do you feel that Apple is somehow gouging or doing something wrong?
Yes, of course. And Exxon is, and Mobil is.
All right, I'm sorry. That is so good. So he needed an ad hominem. He thought he really got him there, right? You exist in society. You work for a corporation, John. I'm gonna lay this trap.
Curious.
And when John didn't did attack his parent company, conceded it. He had nothing. He just sat there like a lump on the log.
No, I mean, we have
Smug
price
piece of
controls.
shit.
We have other mechanisms that Larry Summers has never advocated for. We have price controls. We have the ability to nationalize refineries. Mm-hmm. We have the ability, and let's be clear, that's what's going on here. It was the refining capacity. There were certainly supply shocks because of Russia and Ukraine and Saudi Arabia, but it was refining capacity for things like gas. And it was, in many instances, with a lot of these corporations, we don't need to ramp back up in terms of production because we can just raise prices.
Yeah.
If we're selling, we're selling 100 lollipops a day at $1 before the pandemic. And we fire half of our workforce because people aren't eating as many lollipops. And we shut down a bunch of our machines because we don't want them running because they cost us money. So after the pandemic, we can only produce 50 lollipops, but we can charge $2.50 for these lollipops. We're making more money than we did prior to the pandemic. We don't have to hire people because we can just say, like, we can only have the ability to put out, 75 lollipops now or whatever it is, or 50 lollipops, but we're charging 2.5 times what we charged when we were able to put out 100 lollipops. I'm making more money. I don't have to hire people. I don't have to bring on these people until the party ends. And it's like, okay, I'll hire those people back, and still getting $2.50 per lollipop until somebody starts to go like, hey, wait a second.
Right.
Because I'm going to do that because I'm going to get that money because I'm gouging. And just because in Larry Summers' mind, you wouldn't call yourself a price gouger, doesn't mean that he's not a price gouger.
Yeah.
That's Larry Summers. Like, we should really check with the source. Do you think you're doing something wrong? No? Well, I think we have our answer.
Yeah, that's how we deal with criminals, right?
Unbelievable.
All right, but we got to get to the end here, right? I mean, how much more do we have?
Like a minute.
All right, let's.
Point for me.
Do you feel that Apple is somehow gouging or doing something wrong?
Yes, of course.
So-
And Exxon is, and Mobil is.
So let's talk about Apple. Let's talk about Apple. Do you think Apple should just sell phones for less and not have enough phones? What would you have Apple do?
You're saying to me, John, market forces are market forces. And if demand goes up, are you suggesting, young man, that Apple should charge less than they could charge? Let me flip that on you. When there's a tightness in the labor market, what you're saying is the workers shouldn't do the same. That the workers, just following the same capitalistic principles that allow Apple to charge more for their phones, shouldn't charge more because wage inflation is driving inflation.
That's not at all what I'm saying, John.
That's
It is
exactly what you're saying.
Actually, it isn't. Every worker should get as high a wage as they can. It would be a terrible idea.
But the
to try
Fed
to
is
restrict
going to
the
intervene. The Fed is going to intervene to make that not possible.
No, the Fed is intervening to control the overall level of demand growth.
And what will that do to? And what will that do to the labor market?
If it goes much faster,
What will that do
than
to the labor
supply,
market? What will it
lead
do to the labor market? It will
It
loosen
is
it.
likely to lead to
looser labor markets.
a somewhat looser labor market.
Exactly.
We hope to minimize that consequence.
Yeah, there you go.
Like, okay, so
First of all, Larry Summers has explicitly said we need to have 2 more million. What is it? 4 million people out of work. I mean, he's explicitly said those words. Like, pull the quote up.
Well,
See if he,
but
find the quote.
this is what Jay Powell said in his testimony about the 2 million people. When he was speaking with Elizabeth Warren, he was like, "Well, it's an unintended consequence."
yeah. Well, I mean, it's just like That's where he got him there. So the demand for labor was increasing wages, but we can't have that. So the Fed has to crush labor. But when it comes to corporate price gouging, actually, let's not address that at all. And in fact, our solution is going to be let's crush labor some more.
Larry Summers said in June of last year, we need the jobless rate to rise to 5% for a sustained period.
There you go.
In January of 2023, sitting in his, from wherever it
The
was.
Bahamas,
in
yeah,
the Bahamas. But he is on there going to say, more people need to lose their jobs.
And inflation, the inflationary period was highly concentrated in the first part of last year, too, right? And we're still raising rates to discipline labor. So the reality is that this is not about inflation. This is about disciplining labor, because no matter what the problem is, the solution in Larry Summers' minds and people who think like him is always discipline labor. Discipline labor. And so they're pretending that inflation is still this massive problem so that they can continue down this road. The labor discipline is the point.
In fact, I think Stewart undersold it a little bit. I'm looking at a chart right here from the National Income Product Accounts of the Bureau of Economic Analysis from the EPI. Corporate profits in 2020 Q2 to 2021 Q4. 54% of the normal recent contributions to growth in unit prices, 54% of inflation, a function of corporate profits, whereas between 1979 and 2019, it was 11.4%. Non-labor input costs shot up to 40%. 38.3 when it's typically 26.8%. So input costs are definitely higher, but there isn't a 40% disparity as to where they normally were. Mm-hmm. There's a 12% disparity. Unit labor costs also much higher in terms of the non-financial corporate growth, but let's be clear. That labor cost is sort of like there's a debt associated with that that has been ongoing. But if you've got a big jump in profits, man, that's the first place we should be looking at if you're really worried about labor. If you're really worried about the working people that you're supposedly worried about.
Yeah. All the non-college educated people that Larry Summers talks to on a regular basis. Clown. I'm thrilled he got humiliated. I will return to that clip this weekend. It will make me very happy.
Good for Jon Stewart. I don't know if he was saying that same stuff back in 2008 and 2009. But
either way, we'll take it.
We'll take it. Meanwhile, we watch Jon Stewart slam Larry Summers for his cheerleading to throw people out of work. Again, Larry Summers calling for a sustained unemployment rate of 5% for years and years. Every time he gets in front of a microphone or a TV, he says, we need to throw people out of work. It'll be unfortunate, but it's the only way to save.
Yeah.
Save.
Take your medicine.
Yeah, exactly. You take your medicine.